Bringing Scott Bauer. We have the CEO of Prosper Trading Academy joining us to talk currencies, treasuries this week. Scott, welcome. Seems like the focus, good morning, focus is going to be on central bank policy decisions, right? You've got the Fed front and center. Two-day policy meeting begins tomorrow, and we'll get the announcement on Wednesday.
Absolutely. The Fed, Bank of Japan, Bank of England, it should be a pretty big week. And I think the one to really watch is the Bank of Japan here. That one probably has the most at bay, if you will. We're not going to be lowering rates here. I think we should. The Fed most likely is going to stand pat. Bank of England, maybe they're going to. Bank of Japan, though, that's really the wild card. Boy, the markets are really prepping for a potential hike there. Not a cut, but a potential hike there. I'm not so sure. I think we've seen this game before.
Yeah, we've been talking about the disparity between what's going on right in the Western world versus Asia. Talk to me a little bit about how it's not just the uncertainty in terms of what the BOJ is going to do, but it's also the focus being on the Japanese yen, right? Because that yen carry trade and the ripple effect that's had on so many of the markets we follow.
Oh, yeah, it's been really volatile lately, and we've seen the yen recover a bit against the dollar here, and I think it went a little bit too far, too fast. And if they don't do anything with rates, if they don't raise rates here, boy, we can see a big, deep, sharp reversal real quickly.
Yeah, dollars come off with the yen rallying back, right? And again, it has had quite the ripple effect on some of these other markets like gold, the indices. Alex was talking about it this morning. Alex Coffey helped us kick the show off here. Scott, talk to me a little bit about, when we're talking about the Fed, everybody's kind of pushing back on these expectations of a cut right now. But September, ultimately, we're hearing of one. And there's even kind of whispers of maybe a half a point cut if we were to see the data suggest that warrant a little bit more aggressive approach come fall.
Yeah, I'm not so sure about the half a point just because of what you and your previous guests were talking about with the political ramifications. Though, you would think that really shouldn't play into it. 25-point cut, that is
justified
almost 100% at this point. And I don't see that as being political, quite honestly, because that's been on the table for a long time. It's not something that has just popped up. What is really unbelievably surprising to me, Ben, if you go out a little bit further to look at CME FedWatch tool, not only is basically 100% probability of a cut in September, we're seeing about a 65% probability of another cut in November and a greater than 50% probability in December now. So we're seeing, potential of 3 cuts out there. Now, the November and December would be after the election. So anybody that is, worried about the political side of things, they can throw that out the window here. But you know what? The data to me really suggests it. Look what the 10-year has done. Obviously, this Friday is going to be a big one, seeing the jobs number. I don't think that's, that is on the Fed's mind at all for this week. Though I still would not rule out a cut this week, even though it's a very, very low probability.
I like that. So again, cut this week, low probability, September justified. 50 would be weird in terms of the optics, it sounds like, as far as the election cycle and all. But, also, Scott, getting to your point here about the 10-year, the dollar, you can understand why it's kind of been, the weights feel, it's been holding this lower level, somewhat weighed on by 10-year yields, which have come off. We're near these July lows.
We are. I mean, 103, 103.25, that's really where it's got to hold. If we get right down to that area there, a lot of it is going to depend on what we see happen with these other central banks as well. And again, I wouldn't be surprised if Bank of Japan does nothing.
So the Fed ultimately, in terms of tipping the scales to, well, it doesn't seem like there's really nothing in between now and Wednesday to do that, right? But as far as September and solidifying that, I mean, we've got quite a bit of data. Like, for example, the jobs report on Friday is going to be first and foremost front and center.
Absolutely. You've got 2 jobs reports before September, and you're going to have a whole nother round of all the other eco data, PCE, continuing other, CPI. So there's going to be a lot of data there. But I think absolutely September is justified given the weakness that we've seen in this eco data coming out here. We talk about this often, Ben. This is data that's in the rear view mirror. And if they are forward looking, forward thinking at all, I think they have to look at and say, you know what, the economy is teetering a little bit here.
Yeah. Scott, in terms of that 10-year and taking out those July lows, it does feel like kind of momentum, the trajectory with the expectations for the Fed rate cuts. And as you pointed to, we're kind of on to the fact that the economy is starting to slow a little bit. Maybe we do get new lows here. Maybe we do start to work our way back down to 4%.
It's possible. I mean, where were we back when we broke 4% in the 10-year, 6 months ago? I think we got down to 380, 375 maybe. I'm not saying we're going to, get that far down right here, but 4% is definitely in the sights here.
Okay, taking a look here, should we work our way? Let's see, when we did get down below 4%, what was it here? I'm trying to look. Yeah, we got down to 376, basically. We're talking about the fall of last year into the beginning of this year. We also retested that lower level. So, again, we'll watch, but still kind of working our way through the middle of the range here. And you guys know how I feel about it. As you build momentum through the middle of these ranges, you open up a door for a retest. So I think a lot will depend on that jobs data Friday. Definitely we'll be watching that as well. Scott, appreciate you joining us here, helping us take a look at currencies, treasuries to kick the week off, talking financial markets with the CEO of Prosper Trading Academy. Now,